I'm Jane Morgan from JMM, and today on this Expert Insights episode, I am joined by Managing Director of Latin Resources, Chris Gale. Latin Resources Limited is an Australian-based mineral exploration company with projects in South America and Australia. The company is developing mineral projects in commodities that progress global efforts towards net zero emissions. So good morning, Chris.
Morning, Jane. How are you?
Wonderful, thank you. Now, look, we've just released the quarterly activities report. So we're just here to give the investment community a little bit more insight into the activities of Latin during this period. So at the Salinas Lithium Project in Brazil, which of course is being fast-tracked for development, this quarter we've seen some pretty significant milestones at the project. Can you just provide us a little bit more details on these advancements made?
I think first and foremost, obviously, the standout was the increase of resource to 77 million tonne, and the measured and indicated going to 67 million tonne, which is, a credit to our exploration team headed up by Tony Greenaway. We're now in a position where we've also drilled Planalto, which is a sister deposit discovery we made earlier this year. We've put some more holes into that. That'll come out. The MRE, the first and third JORC resource, will come out that. So over the next couple of months. But this resource is growing to 100 million tonne, and that's important for us because at the end of the day, in our view, to be a tier one producer, you need to be able to produce 100,000 tonnes of LCE per year. Now, how do you do that? You need to be able to produce 800 to 900,000 tonnes of spodumene concentrate per year for 15 years, in our view, to be a tier one, call yourself a tier one producer. So we've got the resource, it's looking great. As I said, Tony and the team done a fantastic job in Brazil on that. We're now at the point where we're holding up on that, and we've started our development work. So we've moved from explorer to now developer. And that means working through our mining planning, which incidentally, which is just about completed for our DFS. We've managed to, Snowden's were brought in, and Aaron Muir has just joined us 6 months ago, our new COO, who worked for Mineral Resources for 5 years as operations general manager or general manager operations. He's worked with the mining plan to get our strip ratio right back. It's looking fantastic because that measured and indicated 67 million tonnes is going to be used, obviously, for our DFS. Our PEA, which was an excellent PEA back in October, we only used 27 million tonnes for that. So, in summary, we've had a great quarter in respect of exploration update again, nearing now 80, 90, 100 million tonnes of resource. Mining planning, DFS work started, development work started. So it's been a significant quarter for us.
Wonderful. And just moving on to the cash now. So at the end of the quarter, we reported 21 million Aussie in cash reserves, and the project is now fully funded, as you mentioned, until the FID, final investment decision, of course, in Q4 2024. So how does Latin Resources plan to utilise this strong financial position to accelerate the project development and ensure that long-term financial stability?
Well, I think at the end of the day, our major cost was drilling. That's finished. For example, we spent $17 million last quarter out of the 18 million for drilling and getting that resource to where it is now. We've concluded the drilling. There'll be a bit of assaying, and the third resource will come out. But we're now very focused on conserving cash, moving into the development phase we'll start some early works, which is a road upgrade. We'll start the foundations for the pipeline, and we'll start the power line. We have budgeted to be in surplus by the end of the year by financial investment decision. So we're fully funded through the FID, and that means that we're going to have significant focus on building our DFS, completing our DFS, then moving into funding to make that financial investment decision. So we're in a really good, strong position. I think someone said to me, couple of days ago, you guys did all the right things with your funding when you raised that 35 million in October at the right time, because as we know, markets are pretty ordinary at the moment. We're seeing lots of other companies out there, our peers, having to raise money at significant discounts. That's not going to happen with us.
Wonderful. And now just to Offtake. So can you elaborate a little just on the progress and, you know, the potential impact of these shortlisted Offtake proposals with prepayment funding from some tier one parties? And so look, how are these agreements rather going to support Selena's project's initial production phase?
Yeah, good question. So as our investors, stakeholders know, we started that process. Macquarie Bank started that process back in November. We closed it off in May. We shortlisted in June. And we're now in a position where we have 4 significant tier one. Now, they're a combination of chemical producers, OEMs, traders that have put up a proposal to us. They are conditional upon DFS. So we didn't want to have the situation where we're going to announce a non-binding offtake. I don't want to have that. I want to be in a position where we have a binding, unconditional contract for funding. So we'll publish our DFS third quarter. We'll then, the offtake providers will review the DFS, and then I would like to think within the next couple of months we'll make a decision on which offtaker to go for, which will be a binding unconditional offer to help fund our project.
Now, just on that actually, so environmental and development permits are obviously crucial for any project. So can you provide some insights on the status of the permits and how they're going to align with the project's timeline for construction, which of course is going to be 2025?
So this is probably the key item, that our key focus is, and most companies have a key focus around environmental permits, construction license, and your mining license. That's where normally companies come apart with extended environmental licensing. I was in Brazil last month, met with the mining agency, the environmental agency. We're well and truly on track to have that approved by the fourth quarter of this year. I'm not sure which month yet, but we had a visit from the environmental agency back in May. They ticked a lot of boxes. We got a couple of questions. I want to get a few more questions to answer. So I am very confident we'll be in a position, certainly by the end of the year, to have that approved, as well as our development approval to start construction early next year, which will coincide with our funding and a financial investment decision.
Thank you, Chris. And just in after balance date events, so we've reported that we've had some exceptional high-grade lithium oxide drill results. Can you tell us a little bit more about what these results mean for the company?
Yeah, well, as I mentioned earlier, this Pernalto, we've got a lot, a bit more work to do down there. But for us, we'll get an inferred resource out of that over the next month or so, which will add into the Selena, a Salinas deposit. So eventually, we believe that the Selena deposit, which is now the single largest lithium deposit in Brazil, will coincide and eventually be developed with Planalto as one open pit. So you're talking another, who knows, mine life, maybe another 5-10 years mine life with Planalto added in. We had some great hits in there with 1.6, 1.82%. Look, for us, it's a bit of icing on the cake sort of stuff, right? We now have a Selena will run us for the next 10, 15 years, and we'll add another 5 to 10 with Pernalto. So look, there's not too many assets. A lot of people are calling this as the most valuable and best undeveloped lithium asset in the world. And on top of not only the size and the grade, it's actually the mineralogy as well. This is pure spodumene. Recovery rates coming out of there are exceptional. So it's exact same mineralogy and geology as we've got at Selena. So that's a major highlight for us.
And finally, just looking ahead and just to reiterate, so what are the key milestones that investors should be looking forward to from Latin over the next 3 to 6 months?
Yeah. Look, our news flow coming up will probably be the most significant news that companies have in its history. DFS, and remember back to our PEA, we had a 3.6 billion NPV, operating costs of $530, CapEx of $253 million. The DFS will be as robust as a PEA. So the thing in this low-cost environment of lithium pricing is operating costs. That's what everyone's going to be really working towards. We don't know how long this pricing is going to be at these levels for, around $900 to $1,000, but we're operating at $530. Sigma, our peer, which is 65k south of us, we're operating at $440 from their last report. So Brazil is a low-cost environment. DFS will come out, we'll announce funding shortly thereafter, financial investment decision, but more importantly for us, getting approvals for the construction license, starting construction early next year, completing construction in early 26, commissioning ramp up, going to production second half of 26. Now, we believe, if you look at, it's a very ordinary market, lithium at the moment, if you look at every analyst report, if you look at every bit of news coming out at the moment, people, I think what's happened that the deficit in LCE which was sort of budgeted for 25, it's probably now going to be 26, 27, the way we're seeing things. And just to put you in a bit of an insight of that, we use $1,699 for our lithium price in our PEA. That was the average price between benchmark and fast markets. That was $1,699, which we put in our PEA. We're now looking at our DFS. We've looked at the same formula, the average price of benchmark and fast markets. That is today $2,200. If you look at analyst reports, which we've done a lot of work on this, we think lithium prices are going to be up around the $1,500 to $1,800 mark, 26, 27, 28 and onward. And we'll be actually into production around that level at $530 a tonne operating cost. Low cost, fully sustainable mine, run by hydroelectricity at 5 cents a kilowatt hour, dry stack tailings, recycled water systems, a fully traditional, absolute sustainable mine operating at $500. We're really, really confident that this is going to be a great project and for us, hold a lot of value for our shareholders.
Wonderful, Chris. Well, thank you again for the update and for joining me on this JMM Expert Insights episode. Exciting times for Latin, and we're looking forward to hearing from you again soon.